So Monday we had trade, Tuesday public holiday, last week Friday was a public holiday, so we've actually had very light volumes, 10 billion rand, 11 billion rand now passing through the market into today's session, so not that bad given the fact that we've actually seen a lot of participants sitting on the sidelines.
Yes, and of course Monday, Monday was very quiet from a local perspective as well.
Were you trading on Monday or working on Monday?
I was working, but there wasn't much traffic getting to and from work, which was a nice treat. But not great, I think, from a government perspective. They really should put that public holiday on a Monday because it's a whole day lost of productivity, which our economy can't deal with.
Absolutely. So let's just now touch on the markets trade. We're up around 0.25% today. I mentioned ADP and of course PMI numbers out of the Eurozone. China not exciting people too much either. That's what now put us towards negative territory closer to the end of trade, but overall a fair day.
Yes, well, we were sleeping. This week has been very busy with regards to data. We've had PMI from all across the globe. The Chinese PMI numbers actually came in above expectations, which is why the likes of Bulletin and Sasol are up so nicely today. Obviously, their performance is very much geared towards the Chinese economy. So any signs of some sort of non-hard landing is great to see for BHP Bulletin. They also had some announcements from management with regards to their cash flows. They've got big projects going ahead, especially in the gas, and then they've got the massive Olympic Dam project in Australia. And these have hit some headwinds, and there have been some obstacles there with regards to regulation and gas prices in the US. So this means that maybe they can slow down on those projects slightly and actually pay investors the dividends, because they have been making massive profits, record earnings, and a lot of these have been going into current projects, so their dividend payout ratio isn't great. So maybe if they increase the dividend payout ratio, investors will be more pleased. Me as a long-term investor, I'm more interested in their long-term plans and projects.
So you're saying that it's a good thing that they invest in these mega projects?
Yeah, I'm happy for them to carry on investing. I'm not necessarily looking for cash at this stage, but if other investors are happy and the share price goes up, then you know.
Well, BHP, I mean, it's up 2% today, 253 rand a share. And again, if we could just actually just touch on the fact that we've got a lot of these mining companies sitting on a lot of cash. So cash versus increasing capacity, and you were talking about if we do see a slowdown in China, and I mean even BHP has come out and said that we're seeing flattening iron ore demand coming through from that region. Do you think that it is so wise that all the mining companies in tandem are actually increasing capacity across all commodities?
Well, you know, they're the ones that are actually sitting in the boardrooms and meeting with the Chinese and actually feeling that demand and knowing how much they need to increase capacity. So I don't think it's the end of the world that they're all, still implementing these big plans. I still think there's a lot of growth to come. I think the science have shown that there has been some sort of softening in China. You know, there's been less government stimulus because of inflation worries, but inflation readings from China have actually been coming in less than expected. So maybe we can have a bit more government participation on that side. But I still wouldn't be worried about the long-term aspects. You know, like I mentioned last time I was on the show, Caterpillar results, and they always give a lot of information about what's actually happening in terms of the demand. And they said there was a slowdown, but long-term they're still very happy to carry on pumping those machines into China.
All right, so let's now touch on Mr. Price. Speaking of a company that's always pumping, full-year basic headline earnings per share expected to increase by as much as 23%. That looks like a good number. I mean, expecting the full report coming through mid-May. A company that keeps, looking fantastic from a share price perspective. And of course, for those that have already bought the stock, others say that it's looking slightly expensive. Where do you stand on this?
Yeah, it's a company that never disappoints. Unfortunately, like you said, the merchandise is a lot cheaper than the share price. It is looking quite expensive at the moment. Trading on a forward P of about 20 if you look at the middle of the range of this update. But you know, the company deserves this kind of rating. They've not disappointed. They've got a fantastic niche in the market. I haven't been able to shop at Mr. Price lately because the queues have just been too long. I'm a big fan of their clothing, but I see the queues when I walk in and I walk straight out. So that's a good sign.
So then where do you shop, Byron, if you don't
I enjoy Woolworths.
Okay.
But I like the sector as a whole. I think there's a lot of potential going up into Africa. They've already got the market in South Africa, which I still think has a long way to go in terms of consumers. I mean, we saw African bank numbers coming through now as well, which shows fantastic earnings growth. And we know that the micro lending world is growing in South Africa. And, there was talk last week from the big banks that said that there was not going to be a bubble in terms of micro lending. It was only 1% of all loans going out, so that's not much of an issue in terms of the whole economy. So I still think the South African consumer is strong, and Mr. Price have a long way to go.
Okay, well, speaking of African Bank, and I know that, I mean, let's just disclose this now, you're obviously a very big fan of the African Bank, expected to increase by around 26% on the interim headline earnings number. So again, very strong results coming through. But it's interesting, we've got Capitec playing in the space, we've got the other banks now coming to the fore and getting involved in this unsecured lending space. You're still seeing African Bank coming with great numbers. Can this be sustained, and do you think that there's enough demand out there for all the banks to actually take quite a big chunk?
Well, that's how markets work. When there's a lot of profit to be made, you know, everyone comes in and starts competing. And that's where the big banks have started to come in, because the return on equity on the micro lending is a lot higher than, you know, lending to in the secured market. So African Bank have obviously one of the first movers in that, competing directly with Capitec. And I still think there is a long way to go. You know, they've changed their business model. They've used the Eleni's business and implemented kiosks in all those stores. So they've been quite innovative with that. They've got a lot of road shows going on, and I still think the South African consumer, like I mentioned earlier, has a long way to go. You know, we really underestimate the informal sector, and that's where the unsecured learning is really
okay, but what if
capturing.
Interest rates rise, and when they, not what if, they will eventually, I mean, whether it's a year or a year and a half from now, we're going to see a rise in interest rates, and we're talking about you know, interest rates to these people of around 25 to even 45% in some instances. At least this is what Able and even Capitec is offering consumers. If we see an increase there, I mean, could it actually just cause a lot of volatility, Byron?
I don't think so. Interest rate rising is to stabilize the economy. So when they need to do that, it'll mean that the economy is still growing fast. Of course, we have.
But I mean, the people that they've lent from, you know, African Bank or even Capitec, would they be able to sustain that debt? Is this a concern for you?
Well, hopefully their wages will be increasing. You know, wages are increasing above inflation. We see that from the formal sector and the public sector. You know, we've got a lot of strikes going on. And if you can't beat them, you might as well join them and buy into African Bank shares, because these are the companies that are going to be benefiting from these wage increases, from the strikes that we're seeing all over the place. So I think that disposable income within the households is increasing enough to sustain this growth in the micro lending world.
So why African Bank and not Capitec?
In terms of valuations, African Bank look a lot cheaper. Their book is a lot bigger, so the risks are not as high as with Capitec. And you know, Capitec have been the darling of the market for 4 or 5 years now, and it's been difficult watching it go up and saying it's overvalued the whole time. But it's been one of those that have always outperformed. But I just think on a valuations perspective, African Bank look a lot cheaper, and they also focus purely on the micro lending, where Capitec do quite a lot of the retail banking.
Do you focus on Reunert at all, Byron? We actually had some numbers coming through from Reunert as well this afternoon. We actually saw Reunert saying a fall in headline in earnings per share due to abnormal gain from its sale of investment in Nokia Siemens Networks in January. Is that a company you look at?
Not closely. I'd say that the sale in Nokia Siemens might not be the best call, because I think you know, the growth in data and that infrastructure is a massive growth niche around the world. So looking at that from an investment perspective, I wouldn't be so happy with that sale. Okay,
so let's also just touch very quickly on the banking sector. What is your view on other companies? I mean, we're talking about African Bank and Capitec, but it's all almost like a different animal. We're seeing you know, some of the banks actually doing quite well into today's session. What is your view on the overall banking space?
Yes, I'm not the biggest fan of the big banks. I think, you know, in the go-go days, they made a lot of money from their capital markets and trading and so on, and they all got hit pretty hard. And I think because of that, and because of what happened in the financial crisis, there's going to be over-regulation in the banking sector, especially with regards to those abnormal returns that they used to have, like I mentioned, in the go-go days. So I think they're going to become almost utility-like. I think in the micro-lending world, there's a lot of money to be made, but in actual banking, you know, they're going to be regulated to such an extent that they're going to do well and they're going to grow, but nothing exciting.